All right, what is up? It is Monday, August 9th, 2021. Another day finished. Today is a green day, up $27.24. That's about an average green day for me right now. My average green day is probably about between 20 and 30 bucks. I'll take it. It's a slow day, like a slow market day. So I'll take 27 bucks any day of the week. I definitely have pushed my share size today, and on one of these trades, I've been trading Worx mostly. Had some trades on Any and LMNL, right? Yeah, LMNL. Worx still might have some opportunity today, but I think I'm done for today. It's already 11 o'clock, so the volatility starts to go down. The volume starts to go down a little bit. Maybe Worx will hold up and keep running. I'm not really sure, but I'll show you my trades today on Worx. So we got, I made a lot of trades today. I got chopped around a whole bunch, but I nailed like a nice, it wasn't really that nice, but with the amount of share size that I had on this one move, I made a nice 18 bucks. So when I saw this rip up, and I was looking at, I was doing research on Worx, and I was thinking it was a potential short squeeze because, well, A, there was no news, and I looked at shortsqueeze.com, and it has a 57% short float. So there could be a short squeeze on Worx. Potentially, it's a very high short interest stock, 57%, which is more than half the float. So we could potentially be seeing this stock rip up, pass into the 5s or the 6s today, but I'm done for today. I have to go to work in about an hour, so I want to start getting ready and winding down out of the market. But yeah, I saw this rip up, and I was trying to buy this dip here. I missed this one. I wasn't looking at the screen, but I was looking for this rip out of this flag here. But this is a nice fake out here. I made a new low and then got bought up. This is a perfect entry here for the break of the high and selling into this candle. But here we got another flag, and I was looking for another breakout potentially for a move higher. And here on the first dip, on the new low, got bought up. I thought we were going to see a rip past this candle and keep going. But from reading the tape, I was able to see that the buyers weren't stepping up anymore, and there was a huge block of sellers still, and there just wasn't enough green going on in the tape to justify me holding this move. And so I sold for a 2-cent gain, 2 cents a share gain. And then it came down here, and I waited for the dip off of this support here, off of the previous high of the previous bull flag, which is around $4. And the wick came all the way down, kissed the VWAP, and then I was reading the tape. I saw all these orders, these green orders coming in on the tape, hundreds, thousands of orders coming through, and this candle flipped from red to green. I started adding in on this candle and adding through for the break of 419, and we got the break of 419. I was looking for a surge. Yeah, this is selling off now. I was looking for that surge. I thought because of the short interest was so high, I thought this was gonna like gap up in price and like immediately go into like 450 and go higher up into test the 5s. But we didn't end up getting that move, and I sold immediately when it broke out, and then I didn't see that quick gap up. I sold my position for, it was like, I would say an average 5 cent on 350, and I guess that would be that's about 16, 17 bucks, which is about I made on that trade, which is good. This is actually like one of the highest share size I've had in a while, and so I'm very proud that I was able to have the confidence to push through like my resistance and start adding shares when I know that the setup is there. And I had it was a great risk to reward ratio. I had a really good idea on where the stock was headed. Even though I wasn't right, my idea was still, it still could have worked out. it still could have worked out, and if it turned around, I would have cut my loss at a reasonable price. And if it worked out, it would have allowed myself to scale out. But because we had a breakout and then immediately pulled back, and it was pre-market, I took my profits immediately off the table, which was actually a very good move here. And then here was the move. This was the move of the day. If you could nail this stock here on Worx right out of the open, you would be sitting pretty right now. I wish I would have used this 350 shares and did it again on the open, but I was still very not convinced because, well, when the market opens, the first 2 or 3 minutes are very erratic. You never really know if the move is authentic. You never know if it's going to hold and keep going. A lot of the times you see the move and it fakes out before going in the direction where it's supposed to be going based on supply and demand. But it's very erratic in the beginning. So I saw this dip, and I knew I knew my setup here was buying off this support here on the previous low of the pre-market. So 380, and I was buying at 386, and I had 20 shares, my starter position, and then it got bought up. But I was thinking, like, I don't know. I mean, I'm at maybe 5-6 cents in profit. I could take the scalp, take the small profit here for 6-7 cents a share. I tend to do that instead of holding and waiting for the resolution, which, I mean, in this case, I should have held the position and add into the breakout, but I didn't know that was going to happen, and I should have anticipated that this could have happened, but it was just such like a slow market that stocks that were dipping at the open weren't having this rip and to retest the highs. A lot of the times in the past 2 weeks, it would dip and then have like a small little pop, and then it would sell off below the support and keep going lower. So that's why I kind of justified in my head that I should take my profits here. But in this case, it wasn't the right answer. And then I saw it rip up, and I was adding into the break of this candle here at 408 for the break of the open price, which is a really good play if you find the dip and then you're adding into the break of the open price and selling into the pop over the open price. Or you could keep buying if it's a really strong market. You could keep buying into the breakout of the previous high, in which this case it broke to the previous high and then immediately kind of had a pullback. And so I was very reluctant to keep holding. I thought I was just going to immediately reverse and go back down. So I sold my profits. It was like 70 shares, and I was selling into the breakout for the most part. I mean, I could have held a little bit more, but I kind of butchered it a little bit. I was able to make like let's say 10 cents a share, a little more than 10 cents a share on this move here, but I could add a potential 50 or 60 cents a share on this move here, especially if I held on this dip buy here. But it is what it is. It wasn't a strong market, so I didn't have like high conviction of the dip and the rip strategy out of the open, which is a really good strategy in the hot markets. And that's like my A+ setup. That's what I'd make my most money on, is these open dips and then rips to retest the highs. And so when the hot market comes around, I'm definitely going to be more confident buying these dips and holding all the way for the rip and break through the high. And then here, I just had FOMO. I was just trying to scalp a little bit. I mean, I didn't really do all too well buying up, but I made like a half a cent on this one, half a cent a share, 3 cents a share on that one. And then on the sell-off here, I wanted to buy at the low of this candle, which I did. I bought at 42 cents and adding as low as 39 cents, and then selling for the break back, trying to get that break back over 450. Didn't end up happening. It was mostly a scratch trade, actually. This one, bought the low of this candle, 433, sold for a nice 10-cent profit. I like backside dips. I do really well on backside dips. It's a very high win rate strategy for me. Even though the risk is actually higher than the reward, the higher win rate actually makes up in my strategy for the losses that I do take on these backside dips. So But I should only be doing that in a very volatile market. Right now, I actually shouldn't be doing backside dips because a lot of the times they don't pop. They just keep selling off and I just go underwater and I have to take a loss. So I should only be doing backside dips in volatile markets. But here, I was stupid enough to do backside dip. I was waiting for this bounce off of VWAP. I kept seeing these sell-offs and then the wicks being bought up. I thought we were going to see a pop and retest back over 450 and 460, but I was in at one point 140 shares waiting for this resolution to turn around, and I was reading, because of reading the tape, it saved me from this huge red candle. I was able to see that the buyers were not stepping up anymore and the volume was decreasing. And there was a huge blocks of sellers on the ladder here, and so I was able to sell before this huge candle, 30-cent candle down, which could have ruined my day with 140 shares. It could have ruined my day. I could have been down. I could have given all my profit back and more. So I'm glad I did that. And then I started doing backside dips on these candles after the breakdown of the VWAP, and that didn't end up working out. It's a very non-volatile market right now, so usually in a volatile market you'll see these candles be bought down and then up and then down and up, and these will go down and then up and then down, like very volatile for like 10 to 20 cent ranges. Here you don't really get this as much, so not very good for backside dips. But I was stupid enough to keep doing that, and I kept getting chopped up. It was really pointless to do any of that. And then here I was looking for the break back through the high, which we did get, but it was just so choppy. I just didn't want to like trade it. It's just not my price action that I like to trade. I was really looking for the like a surging type of price action, but we didn't really get it. It was just kind of like a chop up, and then we kissed the high and turned around. And so here, I mean, it was kind of useless to even trade any of this. I was just getting chopped around. Now in this move here, I made about 4 cents a share on 40 shares, so that's like fucking like $2. Made like $2 on that. I made back what I lost on the chop here, and I ended the day 27.24, which I'm satisfied with. You know, I can't ask. I mean, it's a green day. I am happy with that for sure. It's not a home run day, but I'm not going for home runs right now because it's not the market. And I'm managing my risk, and I'm walking away when I'm up and not continuing the trade after 10:30 or 11 o'clock in a slow market, because this is not, right now you don't want to be trading, because half the time I lose on the spread. Like I'll buy a stock and I'll immediately be down on the spread and it'll never come back up. Like, and I'll just get chopped around and I'll just be giving my profits back slowly. And so I'm not going to do that today. Finish the day up $27. I'm happy with that. Let's look at LMNL. I was looking for a rally. I mean, in a hot market, this could have easily rallied past 424 and higher, especially on this volume, over 1 million shares up 1 point per candle, 1 minute candle. I was trying to buy the dip here, 20 shares, scratch trade. That was that. And then I was looking, this is a very good also setup. The red to green setup on any. I knew we were going to get something. Here pre-market, I was trying to buy. I thought the support was going to hold and we were going to retest the highs. But because I saw the weakness, I cut my loss and took that scratch trade, which was good. Here at the open, dipped down. I was looking for that mean reversion trade because I know a lot of stocks that are volume leaders will tend to either dip, like sell off, or rip at the open, and then they'll revert back to the mean before making the next move. So here was a good mean reversion trade. I didn't end up holding this through because I struggle at holding stocks longer than a few minutes, which I need to work on. But here, I mean, I could have started averaging in on these lows. Here we have. Here I could have, see on these candles, it sold all the way down. This candle here dipped to a new low and got bought up. This would be a perfect starter entry, risking off the low of this candle, if you could get in maybe below 35, below 40 cents on this candle, anywhere on this candle, if you bought and then put your stop at 427, 425, you would be golden for that mean reversion trade, because this candle here is a very bullish sign on the 1 minute, a dip below on a new low, but getting bought up and closing near the highs. Very bullish. If you can get on this candle, put the stop below here, and then start averaging in on the higher lows. If you can do that, maybe on this candle here, buy more on this candle here. Maybe you would sell some here. I don't know. I mean, that would still be a very good 20 cent, 10 cent gain, 20 cent gain potentially. And then maybe buy more here, and then holding for the retest of VWAP, selling into here. This would be a great 30 cent a share trade. And if you really wanted to hold to see if you actually got the red to green move, which I mean may not be likely in a slow market, maybe hold 10% in your position for that red to green move. You could have got a potentially 30 cents more per share in a very low risk setup. You'd be risking 10 cents, pretty much 10 cents. If you got in on this candle, this is very bullish. So risking 10 cents for a potential 50 cents, 50 cents. And even if you took a 1 to 2 risk reward, that would be a really good setup. But these work well with high volume pre-market gappers that sell off after the open and are still holding their volume. That's just still trading 200, 300, 400,000 shares on this consolidation under here. A very, very high chance that you're going to retest the VWAP or the open price before fading or keep on rallying to the high. So this would be a great mean. It's called a mean reversion trade. Do some more research on it. It's a very good strategy in slow market periods like we have right now, because the strategies like the breakouts aren't really working well right now. The breakout strategy right now is probably a negative reward strategy right now. And also the dips aren't very reliable right now. Buying the dips in rallies aren't very reliable right now, because a lot of stocks don't have that continuation in the small caps right now because it's so slow. But the mean reversion is a very good low risk setup in a slow market, and you can keep your head above water trading these mean reversion setups until the market heats back up again, and then you can go back to your breakout dip buy momentum strategies then you can really pull in the gains. Right now, you don't want to be pushing those momentum strategies right now, because you're not going to be making money. No stock has really ripped in the past 2 weeks since Neuro. BYSI maybe a little bit, but it was it was a larger cap stock, larger float, higher price. So, no, I think the float was still small, but it was a higher price, and so it really didn't give any more momentum in the small caps. But that's the day for me today. That's my rant for how these strategies have been working for me. Hope to give you guys some good knowledge, and hope you guys are doing well on your trading journey. Today was a average green day. I'll take it. I'm not complaining. Gonna come back tomorrow again swinging. Hopefully the market is hotter and we'll see some more action. And until then, hope you guys have a great day, and I'll catch you guys later. Peace.